Okay, good morning, everyone, and welcome to our third Coffee Microcaps Results Wrap of the week. We've got 4 more companies presenting with us this morning. If you've been with us on either Wednesday afternoon or Thursday afternoon, you're very welcome back. If you're joining us for the first time this week, or indeed first time to Coffee Microcaps, very welcome. My name is Mark Tobin. I'm the founder of Coffee Microcaps. And we're just going to run through a quick couple of intro slides, and then we're going to get straight into it with our first presenter this morning. I would like to make special mention of ShareSite, our virtual event sponsor here at Coffee Microcaps. If you are looking for software to track your investment portfolio, dividend tracking, tax reporting, all of that, please check out the ShareSite website. It's a product I use myself, and very happy to recommend the ShareSite product. Quick compliance and disclaimer slide. For anybody who is joining us for the first time, the companies we normally have presenting on here capped under 300 million in revenue and approaching cash flow break even, or indeed are already profitable, generally from outside the resources and biotech sector, what I like to call industrial microcaps, which kind of encompasses technology, professional services, retail, healthcare, kind of, anything outside of those resources and biotech sectors. Structure this morning's webinar, we got 4 companies presenting. Each company's got 30 minutes, which we're going to break down into a 20-minute presentation, 10 minutes of Q&A. If you do have any questions for our presenters, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate them to our presenters. And please note the webinar is being recorded and will be posted on the Coffee Microcaps YouTube channel on Monday morning. You can follow us pretty much on all the socials, Twitter, YouTube, as I said, for this recording and the other ones we've had this week. Indeed, we've got probably over 100 company presentations on the YouTube channel now at this stage. LinkedIn, and I also write a free monthly newsletter, which you can grab on the Substack newsletter platform. That'll be going out Tuesday next week. I'm delighted. Our first presenter is going to be Tony Abrahams. Welcome, Tony, back from AI Media. And after that, then we're going to head out west. Welcome back, Gerard Dyson from Spectur. And then we're going to have a new presenter. I'm delighted to be welcoming Tim Kelsey from Beamtree. And then we're going to finish up with Rocketdna, Chris Clark, coming to give us an update. And they've had a name change since our last thing. Delta Drone, you might know them better as, but yeah, same business, same CEO, just different name. And looking forward to hearing from Chris. But that's enough from me. I'm going to stop sharing my screen and hand you over to Tony. Tony, if you want to start sharing yours, I'll let you know when it comes up. Yeah, that looks
Thanks,
perfect,
Mark.
Tony. You can
That's
take
the
it
right
over
one.
whenever you're ready.
Excellent. Well, thanks everyone for joining, and thanks Mark for hosting us again. This slide deck is substantively the same as the slide deck that's on the ASX platform. We released our results 2 days ago, so this is an opportunity to really run through that and also to take any questions. So for those who aren't familiar, AI Media I co-founded 20 years ago. We do a lot of the captioning, transcription and translation for Australian TV. And then since the pandemic, we acquired a technology business in the United States. And we're really now at the point where we are deploying the latest AI technologies for our customers. And if you think about all the advances that we've had in what I'd describe as this AI moment, where ChatGPT has really revealed a whole lot of things that technology can do that people thought were impossible just a few months and years ago even. There's been no bigger impact on this kind of technology than live captioning, transcription and translation. And for AI Media, what we're focused on doing is delivering the best possible AI outcomes for our customers, leveraging 3 elements of really important intellectual property that I'll run through the presentation. In terms of the transition of the business, we have been transitioning from a human services business to a technology driven business, and FY23 has seen some really big milestones for us in that transition. Over half of our gross profit is now delivered out of technology sales, which is up from 0 2 years ago. So that's a pretty big improvement. We're profitable, cash flow positive, and we saw an increase of 200% in our EBITDA. At a glance, and I'll run through these points in a little bit more detail as I go through the presentation. But we are now the leading captioning, transcription, and translation provider globally. We deliver over 9 million minutes a month of services. We have the best-in-class technology, providing the only end-to-end captioning solution in market, which starts with the encoding and is important in terms of the AI engines that are used to do the transcription and translation, and then access to our customers' data, which continues to improve the outcomes over what you might get in an out-of-the-box solution. The focus on the business model transition has seen gross margins lift from 55% to 60%. And for context, when we listed in 2020, our margins were 38, 39%. So we've seen a massive increase in that gross margin percentage, which has fallen through to EBITDA. So an EBITDA of 3.3 million and an operating cash flow of 3.5 million. So our ability to convert that EBITDA into cash has also been confirmed. And really excitingly, the improvements in AI, we believe, are only beginning, and that there's plenty more growth opportunity in new territories and new markets where captioning is not as prevalent as it is in the broadcast industry. And that's what's really exciting for us in terms of the outlook. In terms of the key highlights, our total revenue was relatively flat, up $2 million to $61 million. But importantly, the tech component of that revenue has been growing very strongly. So up 33% on last year. And as I said, the total gross profit of $20.2 million is up almost $5 million. The LEXI revenue, which is our flagship automated transcription service, was up to almost $8 million. Now, importantly, this is up 45% year on year, which has helped drive that tech revenue up 33%, which in turn has helped drive that gross profit and delivered the EBITDA number and a very healthy cash balance of $17 million. Now, from that $17 million, we have final payments of US $5.25 million that we will be paying this month. And that will completely settle all of our obligations in relation to those previous acquisitions. We celebrated, as I mentioned, 20 years this year, and in so doing, we've rebranded the company and we've integrated all of our product suites with that new branding and the new look and feel. We've successfully integrated 4 acquisitions, and we've transitioned to a competitive technology platform, and we will focus on continuing to grow the product suite and entering new industries and territories. We do operate globally, and our largest market is now the United States. A quick overview of the ecosystem. So this is the key slide to understand what AI Media's intellectual property is and what really forms the basis of that competitive moat. Firstly, we're building on not just 20 years of experience at AI Media, but the technology company that we acquired, EEG, has actually got a 43-year history of building that encrypted encoding technology, which is there in point 2. Now, effectively, we take the video input from our customers, and that video input can be taken in a number of different formats. It can be taken through a direct connection, in which case it would go to that encoder core box, or it can go over an IP connection, in which case it will use Alta, or it can be streamed to a cloud-based encoder, in which case you would use Falcon. The important thing about the encoding is that it is the central component of the system that makes the AI perform better. Why does it do this and how does it do this? If you can think of it as almost noise cancelling headphones. What this encoding does is it's architected in a way so that it takes isolated audio from individual commentators. It's not looking at mixed audio, say from a stadium where you've got background noise, crowd cheering, PA systems over the background. We actually plug in isolated audio to therefore, which then gets fed into the AI engine to produce the speech to text. And that encoding is absolutely critical. If you don't have that encoding step, you're not going to get the benefits of the latest AI, because the latest AI really requires clean audio feeds to get the level of accuracy that's required. And that's an accuracy of at least 98%. So that's the first element of the intellectual property. The second and third elements are iCap and LEXI, which you can see under point number 3. So iCap is actually the network and the cloud platform that supports and connects to all of the encoders. So every single encoder that AI Media ships is pre-configured with iCap. And what that does is it connects all of those encoders to each other, but also to the iCap cloud. And why is that important? Well, because it's not one AI engine that's the best performer around the world for any different language pair or any different situation. There are actually dozens of different engines, each of which perform better based on a different situation, setting, or language pair. And so having dozens of potential engines available on the iCap cloud means that all of those engines are available to any customer who has purchased one of our encoding solutions. And therefore, this has enabled us to mix and match the best AI engine. It's future-proofed the technology because we're not having to pick a winner. And what we can say is that the leaderboard shuffles pretty quickly. There's a lot of investment obviously going into these AI engines, and so being able to continually improve, monitor, and add the best engine to the iCap cloud network is a really key component of the future-proofing of the solution. So they're two of the three elements. So it's getting the right encoding, the noise-cancelling headphones, connecting to the best AI engine for the piece of content. And then the final element that really makes a huge difference is LEXI. And the element of LEXI here that I'm referring to is its ability to reach behind customer firewalls and pick out the data and metadata associated with the session that's going to be captioned, which helps then provide the AI engine with context. So a great example of that would be if there's a weather report coming up, and it's got the name of a cyclone that's say called Saroja or something like that. If you haven't actually told the engine that that's what's actually going to happen, it's going to assume it's something completely different, and it will be completely unusable to the viewer. And so those three elements put together, the encrypting of the audio, noise cancelling headphones, connection to the best AI engine, we don't have to pick a winner, and access to our customers' data systems so that we understand the context automatically of what's being captioned. These are the three elements of intellectual property above and beyond what you would find commercially available. And this is where we are continuing to invest. Some of our blue chip customers and new wins on that slide. You'll notice on the right, a lot of sporting brands. And that's because the AI advanced this year to allow us for the very first time to caption sports, which had been in the too hard basket until the improvements in AI that we saw this year. And so we've seen a massive take up of those big US brands for LEXI, delivering that $7.8 million sales number, 45% up on last year, and really helping to drive a lot of the growth that we're seeing now and the future growth. This slide is probably my favorite. It looks at how well we are growing our network and how well we are growing LEXI within that network. So we've grown the network in a year by 21%, and we've increased our share of LEXI within that network because LEXI is growing at more than twice that. What's really relevant here is that when we acquired EEG in May of 2021, there were less than 1 million minutes being delivered with LEXI. We've grown LEXI by more than that in the last year, and we're seeing that trend continue with the release of LEXI 3.0, which has been a massive game changer in terms of accuracy. In terms of technology updates, we continue to invest in encoding enhancements, iCap enhancements, and LEXI enhancements. And then in terms of financials, again, just the key thing to call out here is that 54% of our gross profit is now coming from our technology sales, and that's notwithstanding that that's less than 40% of the revenue. This is because that business line has a much higher margin, north of 80%, compared to our traditional services business, which is around 40%. This slide really unpacks that contribution of gross profit. And if you look at the FY22 to FY23 line, you can really clearly see that tipping point having been reached in FY23, where over 50% of our gross profit is now being delivered through our technology sales. That's just a little on the EBITDA bridge. When we listed in FY21, a loss of 9.3 million, to have turned that around to a 3.3 million EBITDA profit with a trajectory to continue, we're all pretty pleased about. And we're really expecting this kind of trend to continue. And the momentum that we've built in FY23, we're certainly seeing continue into FY24. In terms of strategy and outlook, we will leverage those recent product upgrades, LEXI 3.0 and the LEXI Toolkit, which I'll talk a little bit more to and then take some questions. We are continuing to prioritize, as I mentioned, the iCap and encoding technology development, scaling our global presence with a pretty deep and strategic partnership program. And we are looking to execute on growth opportunities in new industries and new markets that, as I said before, are far less mature than the US broadcast sector in terms of captioning. I said I'd talk a little bit about the LEXI Toolkit, and this is a product suite that we launched just last week. What it is it's an entirely integrated ecosystem to get the most out of live captioning, transcription, and translation. It starts at the core with LEXI Live, which uses that ecosystem workflow that I ran through just a moment ago. That generates speech into text. It generates time-coded text for video output. And then the LEXI Toolkit then says, well, how can I make the most out of all of that data? If we look to the right, we've got LEXI DR, which is LEXI Disaster Recovery. That's a product that in case the internet goes down, you can simply plug in and switch to, which helps to ensure much higher uptime for our customers. LEXI Local is a version of LEXI Live for extremely high security situations. Think US Department of Defense, where they want to ensure that absolutely no data ever leaves their ecosystem or indeed even gets to AI media. And so what we do with LEXI Local is we install a private version of the iCap network behind our customers' firewalls and give them all the tools to then manage that. And that's been very successful. Really excitingly, though, are the other three elements in terms of future growth. So LEXI Recorded is a product that we also only launched this month off the back of the success of LEXI Live, delivering a much higher level of accuracy. LEXI Recorded is a fully automated service where someone can send us a recorded media clip and then within seconds or minutes get that captioned file back to their playout system and playing out automated with captions. And this automation for, say, very fast turnaround content, if you want to, say, clip and share automatically the latest Matilda's goal that's happened, you literally can do that within 2 minutes without a single human being touching it. And the captions are really helping to to drive the AI in terms of understanding personalization of that content for viewers of our customers. And that's a really, really important market for us to explore. The other reason recorded is very interesting is that of the captioning and transcription market, 99% of that market is not live. So 99% of the total market, total addressable market is recorded. Over 85% of what AI media does at the moment is live. And so we do see a big opportunity in that fast turnaround recorded space, particularly with the improvements in accuracy that we're getting from LEXI Live, to really begin to tap into what is a much larger addressable market than the one that we've been tackling in the live space alone. LEXI Library is a rebrand of our sub-silo product. And what this does is it effectively stitches permanently into the time code with the media all of the text that has been outputted. And it allows our customers to search intuitively through the captions and come immediately to a point where that word was said in a video archive, and allows them very easily to clip and share that. LEXI Translate at the top is probably the holy grail. We're probably at a situation with LEXI Translate where we were last year in terms of sport. We can see that it's improving. It's not quite ready for prime time, but it's getting very close. And so we're certainly doing a lot of work to prepare for that LEXI translation. And again, much like LEXI recorded, it gives us access to a much larger total addressable market than we would have just for live captioning. And then in terms of investing in iCap, that's the network and the cloud platform. We're investing in that. We've got a new pricing model that we've released on that. We inherited iCap with the acquisition in 2021, and there were 6 different charging mechanisms. We're simplifying that to a simple hourly charge, and we will now be charging between $2 and $4 an hour, depending on the degree of automation that the users of iCap actually need. That's a quick overview of the competitive landscape. There's really 2 different types of competitors. There's the traditional competitors in captioning services, and then there's the broader technology, media, and broadcast services players. What you can see is that we are the only vertically integrated player in the sector. And I might pause there and hand it over for Q&A, Mark.
Thanks, Tony. We have one question here already. Is there any world event or major sports event that may skew the seasonality of sales with the live captioning volume spikes? So, I mean, we saw the Women's World Cup now. I mean, we had the World Championships Athletics was happening. I was following a lot of. We've got Olympics next year. Maybe, yeah, just talk to seasonality around sports, or maybe seasonality more broadly across the business.
Yeah, that's a great question. There is some seasonality to it, absolutely. So when you're doing, when there's a lot of World Cup going on, or the Olympics next year, we're definitely going to see a spike. But interestingly, we're most likely to see a spike before the event rather than at the event. And that's because now we're actually selling in the equipment that enables the solution. And so that needs to be put in 3 to 4 months beforehand. And so we're really gearing up now for all of our customers to make sure that they are ready for the Paris Olympics. That being said, major events tend to be a catalyst for an upgrade investment decision for our customers that was already on the cards. So really what these major marquee events provide us with is an opportunity to get our customers' attention and make sure that they've got the latest and greatest technology ahead of this big event. So it's less about the volume of hourly captioning, and it's more about, here's a great opportunity to put in some new tech and deliver things better ahead of a big marquee event. We did this really well with NBC Universal it was actually at the Tokyo Olympics. And that was where we really discovered the power of that encoding technology. So we were able to effectively wire up 40 of the 60 commentary booths that NBC Universal had in Tokyo for the isolated audio solution that I was talking about. So when it comes through each individual commentator's microphone rather than taking the mixed audio from the stadium. And that's when we learned how important that was, because for the 40 channels where we plumbed in the isolated audio, it worked brilliantly. For the 20 channels that we didn't, it was unusable. And that was the difference effectively between deploying the AI media encoding technology and not employing the AI media encoding technology. So now we know we need to do it in order to generate these results from the automated captioning. So having those conversations now with our customers globally, and also making sure that they're prepared for the brand new environment that is IP 2110, which is the standard that a lot of people are now moving to, which is perfectly designed for our Alta product. We're pretty excited about the opportunity that the Olympics next year are going to provide to sell some more equipment and get more people onto the iCap network, and which will in turn then see more and more traffic delivered to LEXI. So long answer, I suppose, but there's certainly seasonality to the business, but it's more about now that seasonality getting ready for those big events rather than necessarily the volume alone on those events. Because, you know, we've increased our volume on LEXI by 1 million minutes a month just in the last year. And the seasonality is nowhere near big enough to sort of have a blip on those sort of numbers.
Okay. We got another one here. Can you please elaborate on how you can expand into recorded volume? Noticing most TV shows recorded have subtitling already. You know, how do you win market share off of those existing vendors, or, you know, what maybe some of the studios and production companies are just using internally themselves to get that subtitling in on shows?
Oh, great question, Stella. Thank you. We're not. We're actually not looking to win market share off existing vendors for existing workflows. We're actually talking about new workflows for customers, which is an entirely automated service. So, for example, if Channel 7 wants to send a 30-second clip of the latest Matilda goal, and they want to send it out within a minute, there's no way that a human is going to be able to add captions to that and turn it around within the minute. And so we're really focused on capturing some of that fast recorded market where really getting things out super quickly is important. And that's certainly an area which is of a lot of interest to a lot of our broadcast customers. So it's that sort of fuzzy line, if you like, between live and really fast recorded, where we're targeting the product.
Yeah, for somebody who sometimes follows sports on Twitter, yeah, those little 30-second videos of a goal or a try or something that comes out, you know, 5 minutes after they've scored it from the official broadcaster. Yeah, I could definitely see how, you know, getting that out as quickly as possible would work. Tony, one from me.
And just to build on that, Mark, that then helps drive more viewers to the platform, right? Because if you're sending out a quick Twitter update, oh, there was a goal, you're more likely to go and then switch on the television if you're not already watching it, and therefore you're more likely to consume the ads that are going on. So it's everything that really helps drive people and the immediacy and their attention back to our customers' content.
Yeah, can agree with that. The one question for me is, now that, you know, you have so much revenue coming from the US side, just talk to me about FX impacts on the business now. You know, I'm guessing now you kind of want to see a weak Aussie dollar and a strong US dollar more often than not.
Mm-hmm.
Or where does the kind of natural hedge of kind of US cost versus US revenue kind of fit in there? And how should we think, you know, if we look forward a year, 2 years, in terms of how the Aussie dollar is going to impact the translation, you know, coming back to Australia in the reported results?
Yeah, absolutely. Look, a weaker dollar definitely improves our results, sort of translated into Aussie dollars. The critical point that you make is an important one in terms of how do we hedge. We match our future obligations with where we hold our cash. So we've known, for example, that we've had a $5.25 million US obligation to pay this month. We've kept that money in US dollars the entire time. So the vast majority, I think about 11 million of the 17 million is kept denominated in USD, but we also have cash in pounds, Singapore dollars, Australian dollars, and Canadian dollars as well through our various accounts. And JB, my CFO, and the finance team do a really good job actually of hedging that.
Something to keep in mind, yeah. As we look forward, a weak Aussie dollar is a net positive for AI media going forward.
Absolutely.
Okay. Tony, thank you very much again for joining us. We're just up on time. So I'm going to ask you to please stop sharing your screen, and we're going to head out west to Perth, and we've welcoming back Gerard Dyson from Spectur. Gerard, if you want to start sharing your screen, I'll let you know when I can see it coming through. Yeah, it's coming up now. Yeah, looks all good, mate. You can go for it whenever you're ready.
Lovely. Well, thanks very much, Mark. And it was a pleasure listening to Tony as well. Looking forward to sharing our story today with you guys about where we're at and what's to come and how we performed last year. So our obligatory disclaimer and another, look at where we are at the moment from a share price and shareholders. You can enjoy this at your leisure. So for those of you that are new to the Spectur story, we are very much a purpose-driven organisation focused on making our communities safer, smarter, and more sustainable. And the places that we look to try and do that are the places where you don't have access to power or cables, and they're generally temporary, remote, or unpowered areas, and they're outdoors. Now, how do we do this? Well, we provide what we believe is disruptively effective and efficient solutions to high-value problems. And that's when you contrast them against alternatives or substitutes. And I'll expand on that in a moment. And the what? So what do we have? We have, what we believe is quite unique and very modular solar-powered sensing, thinking, and acting hardware. And also we have software solutions and platforms that enable us to deploy solutions for customers that solve these sorts of challenges. So the challenges that we solve, again, there's a huge array of things that we could solve challenges for, but we try and be quite focused. And so at the moment, the challenges that we're solving directly as Spectur are around security and surveillance, safety and warning. And then we have a raft of other challenges at the moment around environmental monitoring, particularly around waterways, coastal, flood, beaches, and the like. And then we deploy smart city type applications. And these are very useful for other sorts of AI deployment as well. Again, in the same way that we try and stay focused in the solutions that we offer, we also are relatively focused in how we go out to the market. We're a business to business or business to government company. We're very focused. As anyone who's heard me speak before, I often want to quote the fox that chases many rabbits catches none. So we've got a really focused number of customers that we're targeting at the moment, and they are largely government and utility space, building and construction, some institutional customers that look like them, and increasingly a big part of that business is targeting the resellers that target these sorts of markets. And what do they look like at the moment? They're security companies, and they are hire companies, and increasingly artificial intelligence companies. And in terms of, again, focus at the moment, whilst there's a lot of opportunity, we are trying to stay quite focused in Australia and New Zealand at this point in time. What does this look like? I mean, this is a little bit of a picture of our ecosystem or our modular solution. So we have edge type devices here. So we have our typical hardware platforms. These platforms can sense, think, and act, but we can also bring in other people's devices. So these are things that are out at the edge, either in the field, on a construction site, at a beach, in a park, mine site, you name it. They can be out there at the edge. And we connect them usually using the 4G network, but we do have satellite solutions and other solutions to the cloud. And in the cloud system is where we store all of our data, we process it, we do a lot of the workflows, and then we connect in to modular AI. And we've just heard a little bit about AI, but this is a huge exploding industry. There's so much different AI that's available. Spectur very deliberately doesn't develop our own AI. We use other people's. For the sorts of volume applications we're doing at the moment, it's almost a commodity. So we've sought our expertise in being able to plug this in and out very easily from a multitude of different providers that is virtually infinite. And then this cloud is connected to our customers, and they can then either get full analytics of all the data that they're pulling. They can get solutions in real time that include AI applications deployed. And we can also even notify third parties. So that could be a security guard in a surveillance application, or a ranger or a lifeguard in another application. So this is the, from the customer through to where the device is, we provide this modular solution, which can be put in without any power cables or any internet cables as well. So just to touch briefly on how we are different and how it's disruptively effective. If you look, and these are just some examples, but I thought it's worth highlighting here is, if you look at the security and surveillance world today, the substitutes at the moment is you can have guards, or you can put in fences, or you can have locks, and you can have patrols. Or the alternative is you can run your own cabling and wire up a CCTV, or you could build your own system. It's like saying, I need a car, I'll just build my own car. I can buy tires, I can buy an engine. You can imagine how that works out. Whereas what we offer here is very cost effective, certainly compared with building your own or trying to dig trenches for a CCTV. But when you compare the hourly rate for guards, etc., we're always there. Not part of the time there. We're always watching. The system calls for help. It's flawless. It doesn't go to sleep. It doesn't get hungry. It doesn't have to go up to the bathroom. And it's proven. So this is very disruptive as a complement or as a replacement for many of these things here. Safety and warning, it's even more extreme. We're just simply not able to put people in harm's way all the time. We can't send people out to flood-stricken areas to watch what's going on. But also, if you've got a fantastic surfing spot and everyone likes to be out there at 5 in the morning, we're not going to have a lifeguard there. So a lot of these substitutes just don't work, and we're left with hope. And the alternatives of, you can build your own or just accept the risk. What are we to do? I don't think we have to accept that any longer. And again, we're able to be in a position where our systems can be connected and either triggered by remote sensors, whether it's a tsunami warning or a flood detection or fires, or you can visually see what's happening. And then they have an ability to communicate with people. Both people can connect to it and press a button and talk to a first responder, but also you can see and connect to those people remotely as well. And we've got a lot of applications for these here. Really, the substitutes and alternatives really are not comparable. And then increasingly, we're seeing this opportunity in AI platforms. Obviously, the substitute for artificial intelligence is humans. They actually have pretty good human intelligence, but you can't always put people in different places. And the alternative is to build your own. But this is like saying to an AI technology provider, you've got a fantastic piece of software. Now all you need to do is just build your own iPhone and put it on. What we do is we provide the iPhone alternative. As you can imagine, building your own, expensive, unreliable, doesn't work, not scalable. So we provide a solution that they can buy quite easily. It's reliable. We've done thousands of them. But more than that is they can lease them. So if they've got a 3-month or a 6-month project, we can either lease it or rent it. And so the capital intensity of AI companies just disappears or reduces substantially. And this gives an opportunity to allow that burgeoning or exploding AI environment to deploy easily without the capital intensity. And we see this as a huge growth area. Yeah. So just to give you a little bit of a taste for what the scope of that opportunity is, and we think we've got a very large accessible market. is today we probably dominate the beach space, but it's early days. We've only got about 200 different devices installed on beaches. There are 12,000 beaches just in Australia. And you're not going to be on all of them, but we're not on most of them either. You look at construction sites, we've got about 250 customers that we've been dealing with. That doesn't even get you 5% of the medium to large companies or alliance projects. And mobile phone towers, we have multiple customers in this space now and growing, but you know, it's a fraction. Now, not every tower needs a solution. It's generally the remote towers, but you also still see that opportunity is huge and growing. A military, we're not allowed to talk about this a lot, other than to say we've got quite a lot more than 4 bases that we protect. And because Spectur has a unique sovereign capability, we design, we write our code, we store in Australia, we manufacture, we do all of those things locally, is we're able to provide solutions to federal government, local, state and defence that others can't, because they simply are not Australian like we are. And then, you know, councils as well. But so that's just like the spaces that we're in today. When I said before, these are the focused markets that we're in. If you start to look a little bit beyond that, is what is the accessible market for a Spectur? And if you also note that there's not too many that look like us, or too any that look like us, we could come outside of Australia and New Zealand. We've had a look at it, and it turns out that the rest of the world has some and problems. So, you know, there's a lot of opportunity, the rest of the world, but also regionally. Our customer group is deliberately focused at the moment, but we have a lot of inbound interest from these sectors as well, which we deal with, but we don't go outbound to them. And then solutions, you know, again, we've gone focused on a very finite set of solutions, but there is arguably a plethora of other solutions that are out there. And also other sensing is now we have a platform, not just for camera data, but for every other sensor, both on the device and off the device, and an ability to analyze, integrate, automate a workflow with AI and present in real time that data in one platform. That's quite unique as well. Plenty of people do video and analytics, and plenty of people do sensor dashboards. Go look for one that does both at the same time in real time. And then this last piece that I was alluding to before is it's still early days for us in being an AI platform effectively, as being like an iPhone, an ecosystem that other people can write apps for and not have to worry about the infrastructure to deploy them remotely. We think that's very exciting. We've got customers today that are inbound to us at the moment that are AI customers, multiple ones, looking for us to provide both the power and camera platform solutions, and also, you know, the ability to install them and support them. But also increasingly an AI marketplace where a customer comes in and says, I want to buy 10 or 15 of your platforms to deploy our AI solution. And then we say to them, well, would you like us to offer that to our existing 600 customers or more in the future? So it starts to become a marketplace. So there's a lot of very substantial upside in this business. We are unique. I won't labor this too much, other than to say, there's a lot of different axes about which we're unique, and it's very difficult for others to come in and try and displace us. We have approaching 30 million hours of trialing. The business has been around since 2009, listed since 2017, and we are still the only people that build their systems from the bottom up, from a technology, from a mechanical, electronics, firmware, apps, web, storage. We in Spectur do all of that in Australia, and that's enabled us to build solutions that are very much suit the application we're doing, rather than cobbling together other people's pieces and sticking them on a pole, which is what your alternative is. Our platforms can, as I mentioned before, sense, think, and act. So we have edge processing, we can deploy AI within the device, and we also connect it to the cloud, and we can take actions. And those actions, unlike CCTV, can turn on a light, they can speak to someone, they can open a door or give access to a first aid kit, for example. They can operate a signboard to deploy messages. So there's a lot of things we can do around sensing, thinking, and acting. As I mentioned before, we can deploy these remotely. We can effectively put them anywhere the sun shines, and we actually even have a wide solution, so we can put them where the sun doesn't shine as well. But because we build it from the bottom up, our control of both the power consumption and the data consumption enables us to do things that no one else can do, because they're buying things off the shelf that they put together. The power consumption of those is too high. If they try and keep it down, it uses more data because you're doing more in the cloud. We have optimized that solution. It's fully integrated. I mentioned before our Australianness and modularity. Increasingly now, our system is designed both from a hardware and a cloud to be modular. So we can plug in third-party AI very simply. We can put in different cameras, different lights, different sensors, plug and play. And that enables us to give a customer exactly what they want. And it feels like it's, custom built. Really, it's configured. And it also allows us to provide a very reliable core platform and do that in a very rapid and agile way. And generally, people in hardware talk waterfall. Well, our hardware is actually becoming agile. And then the last piece, which might not seem that exciting, but it's actually quite unique, is that we provide our customers an opportunity to purchase our systems. So a lot of them in this space, other people that might have a security camera in the B2B or B2G space, they generally only rent them. We say you can buy it and subscribe. We also let people lease it over a 3 or 5 year term, or you can rent it in the short term. So if you're an AI company and you don't want to own it, and you don't have warehousing, you don't have people, you don't have installers, you don't like owning hardware, you just want to do coding, then we can solve all that problem too. And so that really allows our businesses to design around our customers. Sounds like an odd thing, isn't it? We've got a great team, and there's a lot of words here, and you can read them at your leisure. The things that I'd like to draw out about our business is they're experienced. We have built this team over some time, and they've either been with us quite a while, or they're very experienced in relevant spaces. The other part is that they're invested. They're people that have put their money where their mouth is. I've put a lot of my own money in investing into Spectur. I'm not a founder. I've put my own money to get myself up the shareholder registry. You look at our sales and marketing manager. He's been here 6 months, and he's gone and put a substantial amount of his own money into the company as well. So certainly invested. We believe in the business and very much aligned as well. We can see what the future is. And you can see that by, people are staying here, working in the business, moving forward, and we're building on that. It's a very, very great team that we believe gives us the foundation to go forward and be successful at a much higher level in the future. So some numbers from this year. It's not everyone, but I think it's the sort of a lot of the interesting ones. So if you have a look at, this year's revenue, we grew 26%. It's the first year that we had 2 acquisitions in the business. So we acquired Free Crowns Technologies on the 17th of February, and we fully bought out our New Zealand joint venture on the 17th of March. So we had the joy of doing our consolidation this year, which is, as much, anyone who's an accountant will probably think this is a delightful thing because there's lots of accounting fees, but it's very complicated to do so. Very exciting. But anyway, the short of it is we've got good growth there. And if you look at the last quarter, which was the first full quarter that we actually had the acquisitions in there, look at that compared to the year before, 34% growth. So and a really good run rate. That's well north of 8 million from a run rate point of view. If you have a look at the revenue for the full year, about 60% of it, which is the greenish bits, is recurring. And if you look at it from a gross margin point of view, 71% of all of our gross margin is also recurring. So that's quite exciting. And that sort of translates into these numbers here. You can see our annual recurring revenue as measured was 4.4 million, up 32% on the prior year. And if you look at the quarter where we had the acquisition from 3CT living in here as well, we're up 47% from an ARR point of view for just that quarter. Operating cash. The business from an operating cash point of view used a bit less, not a lot, but a bit less last year. And when you consider that we did a capital raise about 12 months ago to invest in the foundation of the business in terms of the work that we've done around the technology stack and getting it ready for scale. Some of the work we did around sales and marketing. This is, exceptional that we did that, but really we spent some money buying companies along the way too, and everything that goes with that. And if you look at what we did in last quarter, $6,000 operating cash burn, which was $242,000 up on the previous Q4. So again, well, things moving in the right direction here. Receipts well up. Debt. 30th of June last year, 2022, we were at 700,000. That went up to 1.1. We renegotiated our cap on that. And then in Q4, we actually did a small placement at no discount to last traded price to reduce that down to 650. And we've extended that term as well. So that debt doesn't fall due until the end of next year, calendar year. Adjusted EBITDA. Again, when I mentioned before, the investments that we have made in terms of underlying technology stack, putting in the ERP, investments in our marketing, acquisitions, a lot of work that's been done here, and to then only do 9% increase in EBITDA, which I think is foundational, and it's certainly not what we're expecting for this financial year. This is a pretty good outcome. And a cash point of view, we've got certainly more cash than we had this time last year, which is good. So more cash and less debt, that's quite a good combination of things. Some of you have seen charts like this before, so I'll just pull out some of the highlights. You can see here, this is our acquisitions. I'll wrap them in later on, but just so you can see the impact of those there. Mentioned before, good organic growth. Very good when you consolidate it with the acquisitions. If you look at the run rate based on this quarter here, $5.3 million, which ironically is somewhat more than our current market cap. We are in a situation where our cash consumption is on the decline. We have a very clear, well-stated strategy around moving towards cash positivity and profit. That's our first priority. It's not, we're in a growth strategy, which means spend like a drunken sailor. We're actually in, let's get ourselves profitable. Let's get ourselves, growing at the rate that we can whilst being profitable and generating cash. We pulled our debt down. Our gross margins have improved from 55 to 58% in the organic business, and then the other acquired businesses, which have slightly different models and are lower gross margin percentage. Even still, we've been able to increase the overall gross margins in the business. Deliberately focused. We are a proven business today. We have, more than 600 customers we've touched, nearly 3,000 devices deployed. There's product market fixes done. We've done these investments here. We've got a suite of valuable, proven, differentiated, high value, disruptively effective solutions for our target customers in a rapidly growing market. So, this is pretty exciting. We've laid the foundation. The business is ready for profitable growth. We've done the work. We've laid the foundation. The investments that we've done over the last year and the year before are arguably have positioned us now. We don't need to be duplicating that exercise again this year here. So our strategy is, suitably boring. I'd like to think of it, or I think it's exciting, but it's not filled with shiny objects. We want to be profitable. We want to grow, but it's very much around cash and profit. We're going to push into our resellers. That allows us to grow the business at scale without having to scale everything in our vertically integrated business. That real focus here. We're testing these AI platform and mining markets as well at the moment. We're doing some work around integrating our acquisitions and making sure that they're smoothly inside the business to the extent they need to be, and really focusing on that boring thing called operational excellence as we demonstrate the business's long-term success. So my last little word is, what can you take away from Spectur today? We're a purpose-driven organisation that makes a real positive impact on our communities, making them safer, smarter, and more sustainable. We have a very defensible position from a technology point of view. and we have a very large accessible market. There's no one offering what we do. There's people that fiddle around the edges, but what we do is quite difficult. Hardware is hard. It's capitally intensive, takes a lot of work. The cycles are long. Most technology companies think, oh, software is much more exciting. Let's do that. We've got a great space here. We look at ourselves as being the picks and shovels in the gold rush. We've proven our product market fit. We've got high and growing margins. Our team's exceptional. They're fully aligned. We've spent a lot of money, yes, we have, in investing this business for scale. And we believe that fruit's going to be starting. We're bearing that fruit now. And we've got a real focus today as an organization to fund our capital from operations before we get excited about, growth mode again. And I think on that note, I will take a breath and take some questions.
Thanks, Gerard. One question for me just to kick off. I know you mentioned, you've built the technology and how it all integrates, from the ground up. Maybe just a quick point on, patents and IP protection and that side of the business, so that you don't fall prey to competitors, copying, what you're doing. Maybe just talk to us about how you're protecting the business from that angle.
So, the business has got 6 active patents. We have registered the designs of all of our hardware. Everything you can see in this deck is a registered design. We trademark our naming and our branding as well. And then the most important thing that we do is we continue to improve on our product and update it. And that means that those that follow are generally a fair way behind. The other thing is that customers that come into our ecosystem, generally we have quite a low churn rate. And increasingly with the sort of customers that we're in, there isn't an alternative to go to. It's, as you can imagine, you've got yourself an iPhone or a Samsung, and someone offers you a Nokia 6110. It's cheaper and it makes great calls. Your switching costs from having a smartphone, which is effectively what we provide, to going to a Nokia 6110 means that it doesn't matter if it's half the price. You're not going to go to that space. And so these are the techniques that we use today. Generally speaking, patents are only as good as the amount of money you have in lawyers to defend them. And given where we're at the moment, we're putting most of our emphasis in registering our design, growing our business, building our customer base, and recognizing that whilst we're a very open modular system, that both creates a wonderful technology moat, because it allows customers to bring all of their stuff and we fit in other ecosystems, but it also allows us to protect ourselves as the business, because people aren't going to want to switch from that into something that's closed.
And then I know you talked about the reseller channel being a focus for the next year, but maybe just talk to us about what you're doing yourselves on the direct side. Is that, I know you got, if I remember correctly, this year, approval to get onto, I think it was the WA government system for approved suppliers. Is that more of what you're going to be doing on the direct side, whether that's in Victoria or New South Wales or within some of the bigger councils that you're targeting, where a lot of your products would fit nicely into?
Yeah, that's right. We're certainly not becoming a wholesaler or a reseller only. We've actually really accelerated our push into local government in particular, but also state government. In the past, we didn't. Our technology was so unique, it was difficult for customers to buy because it was too far from their specifications. Whereas now, with the very modular nature of our technology, is we can give the customers what they want with a conforming bid. And on the back of that now is we've found ourselves on multiple panels, whether it's local buy or Walga or others, where we can actually participate, and we have a very, very competitive offering. Which is, bringing success. And also, to be fair, with Ben, who's joined us in our sales management role, he comes from a long pedigree in doing state and local government work and tenders and responding in that environment. And so that's really brought another level of capability in our responses to these sorts of tenders. And so we're certainly expecting, we've got multiple tenders that are out there. This time last year, we probably had none. We were just doing sole sourcing type work. So I think, again, you will see that kick in that space there. And you know, today we're at the ACL conference. We've had a lot of interest there from other resellers, as well as local government, state government, and other buyers in our market. So, you know, quite excited about what the future brings there.
Gerard, thank you very much. We're just up on time. Thanks very much for getting up early there over in WA and giving us an update on all things Spectur. And yeah, we'll keep an eye out for announcements as we push through FY24.
All right. Thank you very much.
Thank you. And I do know we have our next presenter, Tim Kelsey, standing by. Tim, if you want to share your presentation, I'll let you know when I can see it coming through. Yeah. And if you just want to go to full screen or slideshow mode, just so we get the full. Yeah, there we go. Perfect. You can take it away, Tim, whenever you're ready.
Thanks, Mark. So I'm just going to skip through this bit and go straight to the. So Beamtree is just for those who don't know, Beamtree is really Australia's leading AI machine learning company in healthcare. And we focus our technology on automation of clinical and administrative process that leads to inefficiency or reduces the need for staff. So basically, we are helping health systems around the world meet the challenge of the workforce crisis that's very real internationally by using technology to mean that the doctors, nurses, and administrators don't need to do things that they previously had to do. And we do that in 3 ways. So we have a concept of the learning health system, and by background, Beamtree it brings together 4 Australian companies, 3 of which have very established roots in Australia. One, in fact, going back 25 years. I would say every hospital in Australia, in one way or another, is a client of ours, often multiply. So we're very dominant in our areas of activity in the Australian and New Zealand market. And essentially, the strategy for growth is about opening the international opportunity for these Australian technologies. But as I say, we have 3 kind of core user cases building up to a platform that serves very seamlessly the clients in various countries. The first domain of our activity relates to what's called, is essentially assuring the data quality in hospitals. Now, this is a very odd Byzantine process which exists globally, is ubiquitous in healthcare, and is very unusual. So if you give me a second, I'm just going to explain what happens. So when somebody goes into hospital, they are obviously, a clinical record is created for them. And that record is held either digitally or on bits of paper, and will track them through their care in hospital until they are discharged or die, at which point that folder or electronic file is given to a human being who in the industry are known as coders. These are really expert individuals, often with postgraduate qualifications, who actually read the clinical notes, the free text notes that doctors and nurses have written, and convert them into very tightly defined digital classifications. And those codes, as they're known, are required for billing purposes and for all analytic applications. So essentially, they standardize the data that's held in the clinical record in a way that means that is fundamental to the revenue of the hospital and the economic health of the system, but also to ways in which the clinical service can be held accountable for its quality and its financial efficiency. So errors in that data are a really fundamental challenge for health systems and often directly threaten the solvency of hospitals. And errors in the data almost always mean that hospitals underclaim for the reimbursement they are due for the work they've done. So we have a technology called PICQ, P-I-C-Q, which automates the audit of that data and essentially tells that human expert whether they've made a mistake or not, and so that they can fix that mistake and bill correctly for services. This is used very widely in Australia, and every day we clean probably about 90% of the data in hospitals in both public and private healthcare in Australia and New Zealand. And we also do the same in a number of other countries. In the Republic of Ireland, we operate the National Data Quality Service. We're about to do so in Saudi Arabia and in Singapore. Now, all three of those countries are among the countries, there are 17 of these, which use the same standard for hospital data as is used in Australia. So it's very straightforward for us to export our technology into those markets without any change at all to the way in which the technology reads the records. In other countries, we do have to convert the technology, and we've just entered into a contract which we announced very recently with Canada, the government of Canada, who also want to prioritize improved data in their health system. And for that, we are converting the technology into the Canadian standard. And we are about to do the same in the UK, where we have a growing business in the NHS in England. And they again want to start prioritizing data quality. So that first domain is all about building the foundations. If you don't have good data, you don't get paid properly, and you can't use it for a variety of other key purposes in the hospital or the broader system. The second domain, which is the bottom of the learning health system cycle, is where if you've got good data, you can of course use it then for comparison. And it's the comparison between hospitals that enables the greatest insight into how a hospital can improve its efficiency or its quality. So comparative benchmarking is a really important approach in healthcare to ensure high quality, high value services. We run in Australia the analytic platform that is used by all the public hospitals here and in New Zealand. It's called the Health Roundtable, and in this collaborative, hospitals share data. We provide them with a series of analytic reports that they use to drive improvement. That model we are refreshing now with a significant investment in the digital experience, with a view not only to expanding the value opportunity for members in Australia and New Zealand, but also to grow the model into neighbouring health environments, notably aged care, following the Australian government's recent legislative reforms, and also overseas, where there's significant demand for a similar kind of model in countries like the UK and in areas like the Middle East. The third area of our activity relates to, you've got good data, you're able to use that for comparison. Through the act of comparison, you're able to identify areas of unwarranted variation, and therefore you can start providing guidance, rules to your frontline staff to reduce the incidence of those events. And this is where we have a very distinctive technology, Rippledown. Rippledown is a decision support platform which is used very widely at the moment, initially following its invention in Australia, in pathology. And in pathology, the technology is automating the way in which clinicians work in laboratories. So whereas historically clinicians would read results, they would then turn those results into diagnostic interpretations and then refer those back to the GP or the hospital doctor that had asked for them. The machine does all that, is taught to do all that by the clinician, and essentially automates the entire clinical process. So what that means in the laboratories in which we work, that they don't need as many pathologists long term, and that they achieve very significant productivity benefits. Our products are very high margin. Rippledown is particularly high margin because of the way in which it operates, and we are able to charge very significant amounts of money for the software because of the return on investment we can demonstrate to the client. So generally speaking, we would sell Rippledown into a client engagement for somewhere between 300,000 and $1 million Australian dollars per annum. So that hopefully gives you a little bit of a sense of the product set in those three user cases, which in hospital terms offers a very synergistic platform. We have an increasingly large number of clients that buy into all three segments of our activity, and obviously look to upsell others who just have one or two to the third. I've mentioned that. Just very quickly before I get onto the results for last year. So the way the learning health system in its three domains breaks down is actually into 4 business units, because in decision support we have a very strong pipeline opportunity in pathology, but we also now offer decision support outside pathology in the hospital. And those two elements are within the decision support segment of the learning health system. Otherwise, we have the coding and data quality segment, and we have our knowledge network segment, which is where we provide our data analytics. All three segments have demonstrated significant growth in the last financial year, as you'll see in a second. So I'm just going to hop back to the beginning of the investor deck, which we put up to the market last week. So in the last financial year, we demonstrated significant growth, 38% year on year, reported revenue growth, of which 51% was recurring revenue growth. So very significant growth in recurring revenue. ARR grew by 25% year on year. And an important characteristic of that growth was the international component to it. So we've spent the last 2 years investing in driving our international capacity with sales and other resources now on the ground in various countries, and that is beginning to harvest for us some significant growth, as you can see there. We invested heavily in FY22 after a capital raise in order to build the growth trajectory we're now on. The operating loss in the year was 1.4 million, significantly down on the previous year, and this year we will be profitable over the year. So our trajectory to profit, which you'll see in a second, is on track. We were in fact operating profitable in the last quarter of the last financial year, and cash flow positive. So just to give you, in those 4 product domains, a little bit of a sense of the pipeline moving into FY24. So I'll just give you actually, before I do that, I'll just give you the quick context for all this, which is this. So what we said to the market is that we will grow this business to an ARR of 60 million by 2026. That's in those 4 product segments. The first of those is the pathology marketplace, which continues to be very, very live in its growth opportunity for us. We distribute both directly and indirectly. Our main indirect distributor is Abbott, the large American laboratory services company. They sell Rippledown to their clients. They have 18,000 clients, and they have recently dramatically re-energized their whole digital health strategy. So we have recently, last year, negotiated a new contract which provides us with much higher value opportunity than we've had historically. So yes, 60 million being the target, and we're on track with that. This trajectory was first brought to the market last year, so people are tracking carefully our progress in achieving it, and 23 was very much on track with the long-term objective. And if I just go back, give you a sense of how 24 is beginning to look. So the Abbott pipeline is very strong, following the agreement of the partnership with them last year. There are 2 kinds of sale. One, this is a Rippledown, the decision support platform. So when they go into the laboratory, they either sell to smaller laboratories a license, just an annual license, or they sell what we call a co-sale, which is an uncapped revenue relationship with the client based on a bespoke negotiation. Those are very high value contracts, and we've just won our second of those in Australia. Pipeline for those is strong, and obviously the market is paying a lot of attention to the acceleration in delivery of those higher value sales. But just to note that Abbott, the recurring revenue from Abbott doubled in FY23. So we've been doing a lot of work with them on building pipeline into this year and onwards to 2026. Direct sales are also very healthy, and we reported a very important strategic development at the NHS, which again was concluded very recently, which has seen one of the major pathology networks in the NHS move from trial of Rippledown to implementation of Rippledown in the laboratory there. That begins to open up the NHS marketplace. There are 28 or 29 pathology networks in the NHS. I should perhaps have added at the beginning that my background before I joined Beamtree, I was essentially the Chief Information or Chief Digital Officer for Australia. I was employed by the federal government in that capacity, and before that I was in a similar role for the NHS in England. And the NHS is proving to be a strong market for us in a number of ways, but the pathology component is particularly exciting. We are very active in a range of other markets, and the pipeline is growing very healthily in those markets. So that's the first segment, just quickly to give you a sense of momentum, which is beginning to really lift after the investment we made in FY22. The second segment of the business, which is the clinical decision support. So this is the use of RippleDown outside the laboratory. Here we have a product which has been through clinical trial. This uses much more modern machine learning to empower RippleDown, in this case, to be able to predict deterioration of patients on the general ward. You should think of this really as just the first user case of ways in which AI can add value to RippleDown in practice, but it's a very powerful user case. Deterioration is probably the biggest single challenge in most acute provider hospitals in the world. It's a cause of significant avoidable cost, and it's also, of course, a very serious issue for people who do deteriorate avoidably in hospital. Our clinical trial and the product now being implemented in a number of countries has shown is that if you do use the algorithm, which provides about 24 hours advance notice of likely deterioration or death of a patient, that it has very material impacts on reducing those events. And we, in fact, were discussing with one of our clients yesterday in South Australia the evidence we now have that managing your patients more effectively with more advance notice also reduces the length of time they stay in beds in hospitals, which is a very important economic focus for those hospitals. Sales momentum is good. We're now launching it properly as a product after the research period, both in Australia and elsewhere. Asia Pacific, we're now negotiating a 20 hospital implementation, which will be a very significant opportunity for us to promote the product into Asia Pacific region. UK is being implemented actually in 3 NHS hospitals, and we expect others to follow suit very shortly. So a very exciting trajectory for what is essentially a greenfield site and a very early stage product showing value of RippleDown in the hospital environment. And then very quickly, coding data quality, relatively not that much growth last year because the focus really was on Australia, New Zealand, where we are already very dominant. But what we were in the background building was the international footprint, which is going to deliver very significantly this year. So we would give strong guidance that there will be very significantly in excess of 10% growth in this segment this financial year. And that's principally driven by work we're doing in Saudi Arabia, where we expect to secure the first national recurrent contracts for our technology around data quality this financial year. Canada, we have already secured the first provincial contract with British Columbia, and we expect that to grow across the country during the course of FY24. And the UK, we are about to announce our first contract for the technology in the NHS in England. So what we're saying is that the current pipeline is in excess of about $10 million US dollars, and we think a significant proportion of that will close in FY24. So final domain of the business, knowledge management, essentially at heart the work we do with the Health Roundtable in Australia. Significant announcement in the last financial year of the Health Roundtable clients' investment in building up the digital platform of the Health Roundtable, which will allow us to serve a whole new generation of value to the clients, to customers already or members already in the network. But as I said earlier, also allowing us to export the concept, the framing, the product to other segments of the health community and internationally. So that's broadly the overview of the business and the momentum into FY24. This gives you a little bit of a sense of the ARR trending over the last 2 or 3 years on our way to the 2026 target of 60 million ARR. This just tells the story of the investment we made in FY22, so significant investment following a capital raise in product and in sales commercial capabilities, essentially, plus some important investments in cybersecurity protections. But as you can see, the trajectory of operating losses reducing very rapidly, and we were actually profitable in the last quarter of the last financial year. We will be profitable in FY24. And so the outlook, as I've hopefully given an indication, is we're very strongly committed to the 60 million, very confident that we'll achieve that objective. Minimum growth in FY24 of 20%. The plus is important. I mean, clearly from what I've said, you'll expect it to be more than 20% growth in FY24, but that's the guidance we're giving at the moment. Clearly, as we drive profitability, very significant focus on cost management in the way I've just described. So those would be the main points I would make, Mark. These we can go into more detail if people would like on the actual results themselves, but I'll probably pause there, and any questions, or happy to take them.
Yeah, thanks, Tim. Maybe just since it is your first time here, maybe a little bit one-on-one in terms of, you know, your customers. Is it, you know, hospital groups? Is it NHS trusts? Is it national government departments of health, provincial or, you know, state governments of health? I mean, who is the kind of main person you are kind of liaising with, or Abbott is liaising with?
Yeah, so it varies according to the segment, but essentially we deal at all those levels. So we deal with governments in the case of our work in Saudi Arabia, the Republic of Ireland, Singapore. That's at Ministry of Health level. They would be the client. In Australia, we tend to deal with individual hospitals, but we also do work with state governments where they commission the service across the whole of their states. It is a hospital-focused business at the moment. We don't operate with, say, GPs or other providers of healthcare, but we are, as I say, moving in one part of our work in the Health Roundtable work to likely into the aged care sector in this financial year. But yeah, so we're generally dealing, the users of our products are hospitals, but often the contracts are agreed either at individual hospital level or at government level, depending on the construct of the health system.
Okay. And then I know you've kind of got three kind of distinct products, but maybe just give us an idea of, you know, somebody selects one of your products, you know, time to implement, and then on the revenue side, you know, how much of an upfront implementation fee comes with, you know, deploying one, you know, whether it's Pick or Ripple Down, you know, just give us a sense of how that would work, you know, if we take, you know, Singapore, for example.
Yeah, so Singapore will be deploying the Pick technology to start with. So they're looking to create a national service that will ensure the data that they're generating is of high quality. That is a relatively simple implementation. Pick is generally just HL7 or an API integration, so nothing complex about Pick in terms of data ingestion. It will be pretty quick. The costs are relatively low. There is a cost associated with that implementation, but it's not significant. And then moving on to an annual license fee, which is obviously recurrent, and which has within it a component of, you know, customer service training, as well as just the delivery of the software itself. Ripple Down, it depends a little bit if we've integrated already with. So the way laboratories work in pathology is they all have, generally speaking, they all have an electronic record keeping system that they're called laboratory information systems, and we integrate. Of course, we operate Ripple Down in 26 countries currently, so we're pretty experienced at integration with those different systems. But when we come across a new one that we haven't integrated before, that can take a couple of months to actually facilitate the integration. Otherwise, if it's an existing integration, it's pretty quick. And again, the costs are relatively limited, and so we'll you know, it's an area of, and obviously then follows an annual recurrent license fee. We do support the client to kind of understand how to extract best value from Ripple Down, so we teach them how to use it, and then we periodically obviously engage to make sure that they are getting the value they expected from it. Ripple Down is a very unique I won't go through it all now, but it has a set of very unique characteristics. Is very loved by the clinical users it supports, but it also now you can track as the client the benefits that are being realized in real time by the model. So that dashboard is very important. The other products, yeah. So AIMSoft, the deterioration index, which I mentioned, that's a very simple integration. Again, generally through an API that is extracting data from the electronic medical record that already will exist in the hospital environment. We can only run this product where we do have digital data feeds, but most hospitals have data feeds when it comes to vital signs and related information. And the Health Roundtable, we extract data from members on a monthly basis and process that data into analytic reports. So that's how it works.
Question from the audience, and it talks to what we were just talking to there about implementation. After implementation, level of customer support on a day-to-day basis. I appreciate there's a bit of training and upskilling of staff that needs to be provided to the customers in the various products, or is that something you kind of hand over to their internal IT administration support staff?
Yeah, it's not. Look, like any decent company, we care a lot about our customers, so we make sure we touch base with them on a regular basis. But we wouldn't expect to do a great deal of hand-holding after the initial implementation. But our products are very intuitive for the user. So yeah, generally a new staff member arriving would actually be trained by the internal client team. But we don't spend a lot of time on site after implementation, although we do, of course, periodically check in with the client.
Okay. And out of this, suite of products, is there one in particular that you talk about, upselling, the full suite to people over time? Is there one that really gets you in the door first, and which one out of these would that be?
Well, it's a very good question. So to be honest, they all. So as I say, every public hospital more or less is a member of Health Roundtable. A number of those, of course, are clients of ours with, say, the PIC product as well. And obviously AIMSoft being relatively new, a smaller number would be using AIMSoft, but certainly the ones in Australia that are using AIMSoft also are clients of the Health Roundtable and of PIC. Rippledown in pathology is slightly separate. Pathology is organized. Sometimes it's organized as a hospital service. Sometimes it's organized as a state-based service. And obviously there's private providers as well. So it's generally speaking that we would see upsell opportunities in the PIC AIMSoft Health Roundtable area, because it's generally the same hospital. That these are different services adding value for a hospital. Rippledown will be often a slightly different client within the hospital setup, i.e. in the pathology environment.
Okay. And then in terms of contract lengths or license lengths, I'm guessing, given who you're dealing with, these are 3-year deals with some kind of CPI built in, or 5-year deals. Is that fair to say they're not, annual things that are rolling over? The contract lengths even longer?
Yeah, so Health Roundtable actually is 8 years. Okay. Generally, Rippledown in pathology would be 5 to 7 years. Pick and Risk, the coding services would be sometimes annual, but with an automatic rollover, or multi-year. And AIMSoft, as I say, is very new to the market, but we are expecting, in fact, the first subscriber to that on a BAU basis is going to be a multi-year contract. We haven't, that's very close to being negotiated. Yeah.
Okay. Another question from the audience, Tim. Are you charging enough for your products? Do you? The question is actually the second part of it is: do you use value-based pricing, or is it more based on competitor pricing? And yeah, maybe just expand on that last point there.
Yeah, no. So
who
yeah,
are you
we
competing against?
Yeah, so we don't. So of course there are competitors, but not really direct competitors. The obstacle to sale has historically been the fact there wasn't a sales force. So when I arrived 2.5 years ago, there just wasn't a sales force. So the companies were, we made some acquisitions along the way to build the enterprise up, but we're just commercializing some fantastic Australian technology. So where there isn't a lot of direct competition. So pricing is generally done on a value-based basis. We will demonstrate to the client the ROI they get from the product, and we will value it usually on the size of hospital, but it does vary a little bit. And in terms of whether the pricing, so all these companies, were startups originally, and so some of the pricing legacy is not at the right level, particularly in Australia, New Zealand. So we have been increasing pricing, respectful of our clients' need to be able to make a proper return on the product over the last year quite successfully, and we've seen very little churn. We almost never lose a customer once one of these technologies is embedded. I don't think we've ever lost a ripple down customer, but we've been increasing pricing both in ripple down to levels that are, we think, fair, and increasing levels of pricing for pick, again, where there was some legacy undercharging in our view, and the market's responded very reasonably to that. Retention in pick is well over 95%, even with the price increases. Ripple down, there hasn't been any impact on client turnover.
Tim, thank you very much for joining us for the first time today. It was great to get an overview of the business, and yeah, we'll keep an eye out on announcements throughout the year. And if I could just please ask you to stop sharing your screen, because I do know we have got Chris Clark from Rocketdna standing by. Chris.
Okay, great, thank you.
Thanks very much, Tim. And there he is. Chris, good morning. How are you? And just take yourself off mute there, please, Chris. Yeah, I can see the cover slide of your presentation now.
There you go. Morning, Mark.
Yeah, I can hear you now. So Chris, if you want to take it away.
Good. Thanks for saving the best till last. So Mark, a little bit of an update from us here at Rocketdna. Probably it's a little side note is that our financial year end is December, so we've only just released our half year results, not the full year. And generally as a business, we tend to spend a lot more time on our quarterlies. So it's just a sort of a bit of an update from our last sort of quarter, which ended, and leading on to our half year results. So for those of you who don't know Rocketdna, we're a drones and automation business. We kind of like to position ourselves as the near map of the drones world, which means that we're able to really bring down the pricing, the costing of drone data acquisition, and how that data is then processed and put into the hands of decision makers. And really that's empowering the mining, the agricultural, and the engineering environment. What makes us very unique is our ability to get a real sort of handle around really complex aviation and regulatory approvals, as well as high safety systems and processes, and combining and integrating that with the right hardware and software, and using the sort of a lot of the power of AI to process this high volume of data to make our customers' lives a lot easier. A bit of a high level about the business. So just yesterday, just short of about a 7 million market cap, just over about 2 million in the bank. No sort of formal large debt, and I guess what really makes this business quite unique is that it is a recurring revenue business. So when we started out 12 years ago in the mining industry, it was all about signing up these long-term contracts with these large multinational mining customers, and predominantly focused on aerial survey. And we've just been with some of those customers since the beginning, 12 years still now, and continue building on those contracts. And what really makes us unique is that it's not just a a mining services business. It's got a lot of technology that's built in. We don't build any of our own hardware or software. We integrate it all together and really customize it for the customer. So we're really able to be quite flexible, as well as quite flexible in terms of how we can meet market demand, but also how we can then manage our costs. So we don't have this large sort of overlay or outlay of putting money out, to develop products. We're able to really sort of pick and choose the sort of moments of how we manage that cost base to bring these technologies to market. And really, the big key driver here is it's not just about the hardware or the software. It's about how you wrap that in the regulatory approval, because we operate in a very highly complex regulatory environments, be that with CASA and the aviation side, as well as when you consider the safety elements when operating in these mining spaces as well. So we're very proud of our recurring revenue stream and the sort of the order book, or our total contract value that we've booked to date. And I'm sure for some of the listeners as well, for any kind of sort of standard tech services business, if you're going to take a sort of an ARR, I think now it's just about 3.5 million as well, where you can add the kind of interesting multiples to that to get your own kind of market cap. As mentioned, very much focused on the mining, agricultural, and now the critical asset industries. I'll chat a little bit more about that later, and some of the projects that we're working on, and how we're driving a lot of automation using drone data collection through software platforms to really deliver the asset monitoring solutions of the future. As a business, like I say, we've been around for quite a while, got quite an expansive reach, and really focused on this particular niche in what we do and where we add value, and really going after the sort of the good margins. Our customer base is all tier 1s and tier 2s. So whether it be from operating in the mining environment or even agricultural, we're very comfortable with sort of addressing the customers at their particular level. Our business model is quite interesting and yet quite straightforward, in a way that when we started off in the mining industry, it was predominantly focused on that pillar 1 of just data capture. Customers just wanted us to go out and fly drones and sort of just supply the imagery. And then as it's sort of developed and matured over the last decade, we've sort of grown with the customers, and it's really had a big reliance not just on that regulatory sort of side that we bring to the product, but also the software, the analytics, and the insights that can be derived from this drone data processing. So while we sort of go out and fly data capture, the next sort of pillar that you're seeing is the data processing. So how can customers reliably trust the data that they're receiving? Is it survey grade data? How do they quantify that data? So from counting cows, counting sheep, to detecting weeds. All of these are then inputted into the customer's system. So whether they already have an online GIS portal or a precision sprayer, for example, we're really great at bringing all of this through on a consistent basis, because that's the beauty about drones when you compare it to satellite or airplanes, is that you can fly drones every single day. And that really gives a unique analysis in terms of also calculating the trends or the deltas between each flight taken, or looking at the compliance between what the target sort of model that you're trying to achieve versus what the actual is. And we're really able to give the customers within these multiple sort of verticals that really sort of critical aspect and view of the environment, and be able to measure that accurately as well. If you have a look at a couple of value drivers at the bottom, this is really what makes us unique and builds out our moat. I spoke a little bit about the regulatory side, but it's also about how we train our people. So we operate in this very interesting segment between aviation, mining, and tech, and there's not very many there's not very many job descriptions or sort of university courses that you can go to learn to do what we do. So it's really about coaching and building up the team. Then it's also about the reach. Being one of the largest drone operators in the world, we're able to really efficiently work our supply chain and getting the best pricing and getting the latest technology. And then understanding that all of this has got to come down to a particular price point. Automation has been a key driver, and it's a theme that has been sort of very consistent through the years, where the more you can make things safer or make it more cost effective or more reliable through automation is always an easy sell with the customers. Now, I know sort of the advent of AI has really sort of come up to prominence in the last year, but it's something we've been working on over the last sort of 3 years, especially when you're looking at sort of applications such as computer vision or object detection in what we do. And we've been integrating this for quite a while and really working with customers on how to take all this sort of consistent drone data or imagery that they're getting and being able to detect things, whether it be sort of like hard hats, or even looking for people not hard hats, or detecting people along boundary fences. You know, it's a lot very different than normal CCTV camera systems, because you're flying at 400 feet and you've got a very different angle or point of view that standard object detection models don't have a baseline for. And we just built up this economies of scale. It's really, once you build this capacity in the maintenance systems and the support systems behind this, you know, every single contract, every single project, every single drone that we put out there gets more and more profitable. So it's really about building that capacity out, and slowly sort of the hands sort of start to wash themselves. A little bit about the financial highlights over the last sort of half year. We recently sort of put out the numbers, just over about 3 million in total in revenue for the last half year. It has been a pretty sort of flat sort of half year compared to the prior, and this has really sort of been primarily to a lot of sort of busy activities. Our Africa business is doing relatively well. A couple of headwinds experienced in Australia up until to date, but we're really quite confident with our new product launch, which has just been announced this week, that we're going to see a lot more acceptance around that automation space. I'll chat a little bit more about that in a couple of later slides. Again, as a business, very focused on deriving long-term contracts. So while we'll definitely take on project work and do the proof of concepts, we're all about how do we build a long-term business and long-term revenues. And it's also just about making the small tweaks at a time. It's about building the puzzle pieces out. How do we integrate and how do we connect onto our existing business model to make it more sticky and more valuable as we expand? So while we've got a lot of key IP in how we do things in operations and how we integrate, what we're also really, really strong at is also having these other partnerships, bringing on their software or their processes or what they might already have, and being able to really easily slip in and make it a sort of a very seamless experience in terms of partnering and working with Rocketdna. Interesting one, we also had a really major announcement with South32, a 5-year deal at sort of the end of the last sort of quarter, so which was announced in July as well. That really leaves us as a business with around about a 3 million total ARR per year, so annualized recurring revenue, and about a 5.5 million total contract value business. We're really focused on the cash flow break even. As you see, we've got enough money in the bank to last us a while, and we can really sort of control our burn rate. Saying that though, we are focused on being a growth business. We just really believe that the timing is so right in that the sort of the first wave of drones has sort of come and is slowly on the way out, and the new sort of autonomous versions of drone and drone technology is just about to take hold, and we're really positioning ourselves to grab on that. So just over a third of our business is revenue generated out of Australia, and this is our primary focus point in growing this more segment in terms of diversifying our revenues as well. And just around about a third of our business is all contracted long-term revenues. Having a look at the latest sort of quarterly results, and the cash receipts are pretty consistent from the quarters on end, and this really just speaks to the business has I guess the really the stickiness and the greatness of those long-term revenues. So as a business, we don't experience a lot of peaks and valleys. It's really about building those contracts one slowly on top of each other. So it's it's the difference when you're in a services game. It's you've got to be in for the long haul, but it really does pay those dividends, and it's quite rewarding in that you're able to recover those costs not just over the term of the contract, but as the customers renew, you get more efficient. We get higher margins, and we're able to generate a lot more cash out of these customers. But that's all got to start somewhere, which generally means you're looking at going with a proof of concept. Maybe start off with a customer you have for a year, and then you slowly convert them into a long-term client. And that's exactly what this graph is showing us. So if you look at the sort of the pink section, we like to sort of classify our revenues between this is being once off, the sort of the green section being customers who've been with us for longer than a year, but have not signed any long-term agreements. So that we might get a month-to-month or a sort of a 3-month contract, but they've been doing this for longer than 12 months with us. And then you've got the yellow section at the bottom, the baseline, the foundation of our business, which is the long-term contracted revenue. So everything that's over 12 months. So when we talk about ARR and TCV, we're only referring to that yellow portion of the graph, but there's still so much more to the business. And this really is a really great indication of the pipeline, the projects that we're working on as well. As previously mentioned, very focused on the cash point. So we've really been able to manage our cash burn on how we manage this business, and we really feel that we've got a comfortable our sort of arms are wrapped really well around the business and the finances, and we're really able to expand or stretch that money as much as we need. Again, saying that though, if the right opportunities are sort of come along, or the right sort of contracts, we're able to use this money for growth as well. Understanding that this is a growing in a tech industry that we play in. This particular slide is going to be taken in context. So this was done up till the end of the quarter in June. But remembering that in July we announced the South 32 deal. So as I sort of previously mentioned, we're adding on so the numbers were ending just north of about 5.5 million on TCV and just under 3 million on the ARR, including the South 32 deal. So a little bit about the strategy of the business, and where do we see the growth potential, and how do we see the market developing in this very interesting sort of drone space. Where we've positioned ourselves as a business is, and it's really kind of looking at two sort of legs of it, is number one is we've got this legacy services based business where we're deploying people out to mine sites or to farms with drones and drone tech and doing the data capture manually, and we've got long-term contracts supporting that part of the business. What we've in that sort of time, we've developed and partnered with AI partners who've got software solutions or software tools that we then use to deliver really fast and critical insights to make our customers' lives easier. And the third on top of that is really the autonomous, or what we refer to our XBot solution, that has now come to market. And the unique opportunity here is all this experience and the customers that we've gathered over the years, plus the AI, now plus the autonomous data collection, really creates this market for not only consistent data delivery, but something that also can come in at a totally different, or a much more cost-effective price points for the customers who are requiring the data on a very frequent basis. So a couple of days ago, we announced that we're the first in Australia to receive approvals for the DJI dock system. And why this is important is that prior up to now, previous sort of systems which have come from overseas have been really sort of been around the $1 million sort of cost point. So really only the tier ones could really afford to take these systems and implement them, and maybe they could only do one box. We've managed to not only integrate technically this product together and put it into one solution that's ready to deploy and put out on a site, but we've also taken the time to build a commercial model which we believe is highly attractive, that customers won't only need to use one, but you can have multiple systems deployed to the site. And the units are really kind of starting anywhere from about $5,000 a month. And that really gives us a really a fundamental step, having this regulatory approval plus this proven sort of commercial model, which we're quite confident we can still squeeze out a couple of margins once we really get the supply chain going. That we've got a long-term plan here that to put these units out and really get ourselves embedded within the customer operations. And our very first sort of target areas are customers that we already either operate at or who already are using other drone data-driven services on site. The exciting thing about drones is that it's not a new concept, so we don't need to reinvent the wheel. We don't need to educate customers on what drones can do and what the initial advantages are. It's really about now saying we're going to take the human out of the loop. We're going to remove them from the dangerous areas, and you're going to be able to have this installed capacity on site available to you 24/7, and you're able to deploy it on a scheduled or triggered basis, which means you can have an alarm or alert that would go off, and the drone can then fly directly to that alarm, and then send back a situational awareness or a live streaming video to the remote operator. And this really kind of now starts to complete, and you start to really get this bigger picture of everything that we can do as a business, which has just taken this long time in terms of the skills that we've managed to build up. It's because, remember, at the end of the day, the customer is looking for more than just a photo. They're looking to make a decision. And how we can then process that data and provide those insights is just as important as how we capture it as well. But at the same time, being very flexible in being able to pivot between the verticals, because the mining goes through its cycles, its booms and its busts. And that's why we've always looked at how do we use the same kind of equipment, all our experience and everything that we've learned, and be able to be adaptable within agricultural and now within the engineering space. And I'll give you some really sort of keen examples and conversations that we're having. There's particular scenarios in government right now. I know a lot of you may know that governments or these sort of large infrastructure bodies, their main source of funding is through debt. And with the high interest rates at the moment, and for these interest rates to be expected to be quite high for the forthcoming couple of years, they really are governments looking at how do we effectively extend the life of our assets. So take, for example, you've got substations or transmission line providers. These assets are typically replaced on an interval base, so 10, 20, 40 years that you would need to replace these units. But with the cost of debt, they can't afford to replace these billions of assets all at once. And we're really coming up to the expected sort of end of life, according to the current interval-based replacement policy, when a lot of these assets will need to be replaced. And governments are now looking at implementing a risk-based or condition monitoring solution, which is not new in terms of how maintenance is carried out. But up till now, there's been no practical method in how do you consistently monitor assets and their conditions. And some of the products that we're working on with some partners is able to how this drone is then deployed on a daily basis. And using such simple things like the thermal sensor is able to, on a daily basis, take a photo, identify that asset, and monitor the daily temperature change in the particular asset. So whether, for example, on a substation or on a bearing on a conveyor belt solution as well, you're now able to pick up these heat differentials. And that generally heat is for some assets is an indicator of near to failure. So on a bearing, let's say, for example, on what they call the idlers under the conveyors, the rate of failure, or the sort of the path to failure, is generally starts at between it goes first vibration, then sound, then heat. But generally what you find is from the moment that you detect heat on one of these idlers to the actual failure is within days. So for clients who've got those sort of risk-based policies in terms of asset replacement, they're doing that all manually. They're sending guys walking up and down these conveyors 10, 15 kilometers with these thermal cameras and manually taking these photos. And this really gives us the opportunity to automate that and use drone technology. So not reinventing the wheel, just removing people from the hot sort of burning sun, and be able to automate that and control that from our remote operating center. Another example of maybe some of the AI products, and we've got a lot of these details up on our website. And this is one very interesting one that we get a lot of inquiries for, especially out of the mining sector as well. Is that we're flying our drones, we're capturing data, we're building these models of the pit. And a very key important part about mines is how they monitor and manage their haul road systems, whether that be the elevation or the gradient of the haul roads. So that's generally referring to trying to monitor, manage your fuel costage as well, to even the windrow or the berm heights along the haul roads for safety. And with drones, you're able to capture this data, and then we're able to apply a bit of AI using our tool sets and really give this visual traffic light system of what is in compliance and what is not. And the customers are able to sort of toggle the parameters, and the tolerances to what they need to look at. But ideally, what we're giving them is this visual area where they can then just go and focus on where the red spots are, and the areas that they need to correct. And this essentially takes a task which they would only do twice a year, because it would just take weeks to perform this, to now they're doing it every month. And we really believe with the autonomous systems are coming out and flying every single day, this is just going to get more and more automated, that we really can get it to the point where they just get an email inbox in the morning PDF report that says, please focus on these areas. We've detected these particular areas are out of tolerance or non-conforming.
All right, Chris.
Yes.
I'm conscious of time, and we have one or two questions that have come through. So,
Sure.
Can we jump to questions, or is there one
Yes.
or two points you want to just pick out of the last few remaining slides?
This is the last slide, so happy to start on questions. Thanks, Mark. Yeah.
Okay, no problem. We can leave this slide up, and people can read through it. One of the questions is, could Chris expand further around the partnership sales model? Excuse me, what this would look like for the business and the scale opportunities this could unlock.
Yeah. So our unique approach there is that we've got these regulatory approvals. We've got this. We own the real estate with the customer. We can go out and we're capturing this data, but we also realize there's a unique opportunity for software partners who may already have customers who rely on geospatial data, for us to really connect with them to enable their products and help enable the customers. So we're not building any kind of competing software products with them. We're really keen on partnering with these providers, whether they be in engineering or, for example, in solar, sort of solar monitoring solutions, any kind of software partners that are looking to get a really high resolution, very frequent data collection point, and that solves these issues for customers. And what we're finding is that model's working very, very well. We've got a couple of we've already got a partnership with Strauss, and we've got a couple of new partnerships which are going to come to light as well as we sort of finalize the proof of concepts and perfect the model, where we're seeing that we're able to really meet market demand very quickly using what's already there and just integrating with our solutions, and we'll then supply that all in a single commercial model and package, making it very easy for the customers to digest.
And then I've got one that was emailed in. It was somebody who was going to join us but got tied up on another call. It was around the significance of, and you did touch on it in the slide deck, the CASA approval. But their kind of question was, how long did it take to get that approval, and maybe any costs that were associated? I think they're trying to understand how hard it would be for a competitor or somebody else to go through that process and get the same kind of licensing or approval from CASA that you guys now have in place.
Yes. It's I probably brush over it, but to kind of explain the layers, so you let's say just at a company level, in terms of there's sort of 3 levels to the licensing. It's the aircraft, the company, and the people. If I start off just on the company level first, you get your remote operating certificate, you get your extended visual line of sight, you get your beyond visual line of sight, and then you get your remote operations, which allows us to fly this. And that's complemented with hiring people who've got who generally come out of the aviation and have got instrument ratings and beyond visual line of sight training as well. And then combining that with the right technology and figuring out that right recipe to essentially simulate what a pilot would be like out on site, but now them being inside a remote operating center, getting all that information, the weather, the air traffic, the radio feeds, all of that coming. And I pretty much would say that's about it took us about 2 years to get to that point. It was always our goal and our target to achieve that. This remote operations approval that came through this last year, it took us just around about 12 months since we started the process with CASA, and it was pretty tough, very in detailed, because it's a very big thing for CASA, because you're removing the human out of the loop, and so they really need to understand those risks and how you're going to manage them all with not having a person on site, from maintenance to, like I say, the air and the ground risks. So it's we went through that, proved it to them, did the demonstration, and CASA were very, very comfortable with with our methodologies and an approach.
And then just final one, I know we are slightly going over time, but the final one is around when you split the customers out into the 3 buckets, into project, ongoing but not long term, and the long term customers. Those ones in the green, I think, was the color. Why wouldn't they convert to a longer term contract if they've been with you for 15, 16 months and it's just this monthly rollover? Is the project that they're working on just kind of too short, and they know it's only going to be 25 months or 26 months, and it doesn't lend itself? I'm just trying to understand, like, why if they have kind of been with you for over a year and are happy and not looking to change providers, why they don't shift into okay, let's put a 3-year deal here, and everybody's kind of got certainty around price, around contract, around all of that.
Yeah, it's probably there's probably multiple answers to that question, Mark. The first one, probably the most apparent one, could probably be that anytime you need to, if you want to make a long-term commitment, that requires high levels of approval. So for some customers, just where we have a relationship, it's just easier for them to give us a 3 or a 6 month deal, rather than the 3 months. It's maybe just a little bit. It's just within the approval sort of range. And also, I think what we've found out, what's quite interesting, is in in Australia, especially the mining market and let's say the project sort of market, it has always been about these short-term orders, where in Africa we sort of cultivated the expectation around customers that it's long-term deals, and it's really just about convincing the customers over time, because there's a cost benefit to them to give us these longer term deals. I think it's just about earning, you know, their sort of trust and adding on the more products or the more features to their contracts. So we're on top of it and slowly working and making them feel comfortable. There's probably a lot of other influences at play, but it's for us, it's you know, how do we, if the giving you let's say a sort of a price incentive is not the most key point, what else can we add to get the long term so the long term commitment?
Okay. Chris, we are over time, so I'm gonna wrap it up there. Thank you very much for coming back in and giving us an update on all things Rocketdna, including the name change from Delta Drone, as people will probably remember from your previous presentations. And I'd like to thank all our attendees over the last 3 days. We've had 12 companies in. All of it will be going up onto the YouTube channel, including Chris's presentation here this morning over the next day or two. So watch out for that if you have missed this or want to watch back on any of the finer details in any of these presentations. Chris, thank you, and I wish everybody a good Friday and a good weekend.